Hey guys, it's Jeff Trapp here with the Jeff Trapp Podcast, and I'm so glad that you've decided to join me today. And we've got a great episode that I'm super excited about. Today, we're going to talk about one of my favorite tax tips. But before we hop into that, just want to remind you that the extension deadline for your individual income tax returns and your C corporation tax returns is October 16th, 2023. So if you extended your tax returns way back in April, your taxes are almost due. So make sure you get that paperwork in, get those taxes filed so that you don't have to worry about the IRS sending you those notices and things in the mail. So today I want to talk about one of those TikTok tax tips that has gone viral, but has also been in the news a lot lately because of a tax court case. And so I want to break down the nitty gritty of the tax deductible board meetings. This is one of my favorite tax deductions. And if it's done correctly and done right, you can get a lot of money out of your business tax free. And also, you don't have to report that money on your personal return. So that's really, really cool. So let's break it down. So this tax deductible board meeting / Augusta rental strategy, as they might call it on TikTok, came about because of the Masters Golf Tournament in Augusta, Georgia. There were folks down there that were renting out their homes and getting a lot of money during Masters Week. Well, the IRS came up with this strategy or loophole that if you rent your home 15 days or less, personal home, vacation home, 15 days or less, you do not have to report that income on your personal tax return. So individuals can take advantage of this as well as businesses if you have property to do this. So this is a great way to get tax-free money. You see this a lot of times in Hollywood. People will have some homes, up on the Hollywood Hills, down in Malibu on the shore, and they'll rent out their home for 14 days to a production company, and they'll just to do a commercial or to do a movie shoot, and they'll collect quite a bit of money to do so. So it's a really great strategy. However, on TikTok, in a 60-second video, they dive into this strategy without providing a lot of context of where you can get into trouble if you abuse the tax code. So, as part of this strategy, if you own a business and you have a legal entity structure set up and you need to have board meetings for your company, you can actually rent out your home to your company and get a tax deduction at your company and not have to report that income on your personal tax return. Well, that's great, and that's really neat, and that's a great thing that you can do. Now, the controversy then becomes folks are not keeping adequate records. They're not actually doing the meetings. They're taking the deduction without the meetings. Well, no, you can't do that, obviously. There's no rental agreements involved. There's no figuring out what the fair market value is to actually rent a space in your home. And so it can be a tax deduction that can be abused, just like in 2015. And I'll spare you all the IRS code sections and the unsexy things. But basically, in 2015, there was a partnership of doctors that got together. There were 3 of them. And between the 3 of them, they took $290,000 of rental expense for these board meetings that they were having. Obviously, the IRS saw that large number on the rental line and is like, what the heck is going on? And of course, they get audited and they disallowed a good chunk of those deductions, only allowed about $16,000 of those deductions, which seems reasonable and fair if you're going to have a meeting in your home a few times a year, among 3 different partners. That's probably 9, 10, 12 meetings, right? And, at $1,500 a meeting, that seems more appropriate. So if you're going to take advantage of this tax deduction, one, you can do so as an individual if you own your personal residence. 2, you have a vacation home and you rent that out for 15 days or less. You can take advantage of that. So like I mentioned before, you might rent it out for, athletic competitions that come close to your home, like the Masters Golf Tournament, the Super Bowl, the World Series, that type of thing. You might run it out to a production company. Or another way that you can claim this deduction is through your business. But if you're going to do it through your business, there has to be an ordinary and necessary expense for you to have those meetings and have those in the home versus out at a different location. And, it might be ease of use. It's easier to do it at the home than go out and try to find a date at the country club that you can rent the property, or a date at a yacht club, right? And so those are things that you want to keep in mind as you utilize this deduction. Now, it can be very confusing. And if you don't do it correctly, it can cost you a lot of interest, a lot of penalties, and a lot of additional tax like it did these three gentlemen. And we definitely don't want to do that. So I highly encourage you to consult with your tax strategist. You can reach out to us here at the Tax Planning Pros. We'll go ahead and put a link to our website where you can book a call with our team. And, we can figure out how this strategy can be implemented for you. So I hope you found this episode helpful. And if you are looking at strategies on TikTok, keep in mind, that's a 60-second video with not a lot of context. And what I find with TikTok videos, right, is they're half truths. Like, yes, you can do some of these things, but it's only if you do X, Y, and Z, or if you are X, Y, and Z, that you can do those things. So keep that in mind and take your information with a grain of salt. Make sure you do the research. Make sure you consult with the experts, because at the end of the day, we want to make sure that you save money on taxes, that you're actually able to take the deduction. But, we want to make sure that you have that money to create that additional cash flow and that long-term legacy for you and your family. So once again, I'm Jeff Trapp here with the Jeff Trapp Podcast. If you like this episode, if you know somebody that owns a home that might benefit from this deduction, owns a vacation home that might benefit from this deduction, or a business owner who has a legal entity structure set up who wants to get some tax-free money, share this episode with them. And please like, share, and subscribe, and have a wonderful day. I can't wait to chat with y'all next week.